Welcome to the Market Enthusiast podcast, where Good Life's Noah Brooks, Chief Market Strategist, and Chris Needs, Senior Research Analyst, break down today's topics, covering their impact on the economy and personal finance in a fun, easy-to-understand way for investors of all levels.
Welcome back to the Market Enthusiast. I'm Noah Brooks, and obviously this is Chris Needs.
Hello.
How are you, sir?
Good. How are you?
Good. Good to be back in the office. Hey, do you remember why we called this podcast the Market Enthusiast?
I don't know. I always thought it's because we're market nerds, but we couldn't call it that.
I'm not a market nerd.
Oh, all right.
No, I think we settled on Market Enthusiast because we love everything about the stock market,
Indeed.
right? And the economy and all that good stuff. And I just think we're sitting here in June of 2025, and we had a massive downturn in the beginning of the year, so the beginning of the half of the year. And we are now back up positive for the year, over 2 or 3%. I think it's 3.25% today. And it's just one of the reasons why I love the stock market, because it proves so many people wrong all of the time. You have people out there that were calling for the end of the world. And I'm the first one to admit, back in April, I did not feel good, right? April 5th, 6th, and then 8th, I think, was the day where it hit low. I mean, everybody was out of their minds, triggered. I don't care what anybody says. The only people that weren't were people that have been perma bears for the last 5 years or something.
So what does the market do? 25% return from those intraday lows.
Yeah.
And here we are.
Right? It's crazy. It's crazy. And I am really glad that we called this the Market Enthusiast. So yeah, I'll just start with that. Welcome. All right. S&P up 2.5 for the year. Mid caps down a little bit, 2.5. Small caps, big underperformers, down 6.5% for the year. When do you think small companies are going to rally more than big companies? Is it in the future?
When the Fed starts cutting rates.
Yeah.
I mean, we've been talking about for 2 years now what interest rates do to lower, less profitable companies.
Especially smaller companies that don't have the wherewithal to be able to go out into the bond market and kind of force their way in there. Maybe they don't have the revenue, they don't have the profitability that the Mag 7 or the large companies have. And it's just a little bit harder for them, isn't it?
Yeah, and when you try and go via the share route, we know what that does. Your existing shareholders get angry, and you see the stock depreciate anyways.
Yeah. So let's start with that. The Federal Reserve, talk a little bit about inflation. We got some interesting numbers that came out, and when possibly they're going to start to lower interest rates. Now, they've been on this pause. We'll call it a tariff pause. The Federal Reserve has said to us numerous times that they still are unsure of the effect on the economy and prices that this back and forth with tariffs have.
Yeah, they cut 100 basis points last year. They did the jumbo 50% in September, 25 in both November and December. And inflation has sort of spiked back up after that September cut. There was a couple marks that went up on the CPI, but ever since it's been coming downwards, and they're still on pause. So you have one side saying, we need to cut rates, you need to do it now, you don't want to be behind the 8-ball, and you don't want to be the cause of a crisis by holding them too high for too long, because we're right 2.1 on PCE.
Yeah,
we just got another CPI figure that was technically up 1/10.
Yeah,
but it was 1/10 below expectations. So we were at 2.3 last month, and that was the lowest since February of 2021, I think.
Yeah. And
we went up to 2.4. Expected was 2.5, but core stayed where it was at 2.8.
I think 2.5% or 2.4% year over year is exactly where maybe we would have been had we not gone through kind of an existential crisis 5 years ago.
That's fair.
I don't think the Fed would be concerned about inflation because we were at 2.4, 2.3 prior to COVID.
In the 2010s, they would have loved 2.4%. They were trying so hard. They're like, what can we do doing quantitative easing for most of a decade?
Yeah, absolutely. But once again, I'll just point out that even though that inflation is close to their target of 2%, 2.4 year over year and 1/10 month over month, that doesn't mean that prices have come down, right? That means that the growth in prices has moderated to some degree.
Mm-hmm.
Yeah. So what would it take for prices to come down?
Deflation generally is not good because that impacts earnings. That impact generally comes in the form of lost jobs as well. So deflationary environments are not good.
No,
obviously.
We had a little bit of deflation during the beginning of COVID, before the end of 2020.
Oil went negative.
Oil went negative overnight, right?
Was it like negative $30 a barrel or
something like that? I don't know that anybody actually capitalized on it being negative. I mean, that doesn't.
It was a futures market, I think.
Kind of an anomaly there. I don't think anybody got paid to take oil, right? That's what would have to happen. But prior to that little bout of deflation in COVID, really the last time we had deflation was during the global financial crisis, meaning prices came down. Obviously, home prices came down dramatically.
Which is the largest component of CPI. Just on that point, so we had 3.9% up on shelter over last year, which actually is the slowest rate we've had in a while.
Yeah.
So
I
starting
feel like
to come in and will maybe impact CPI a little bit less.
I feel like the dam's about to break. People say, well, maybe we're at an inflection point, but specifically on housing, with interest rates going up and the mortgage rates kind of skyrocketing, right? I mean, you could get, a 15-year or even a 30-year under 3% at one point a few years ago. And now a 30-year is closer to 6.5, 7, depending on what month you're in. And that stopped a lot of people from moving, right? And they're thinking to themselves, well, hey, what's the point of me moving out of this house? Because I'm going to have to wind up paying a significant larger, even if the home price is the same, it's going to be a lot larger of a mortgage because rates are so high.
Mm-hmm.
That leads me to the idea of a transferable mortgage. I know that's a thing out there, but I don't think it's a big thing.
Yeah.
Where you just take your loan with you.
I'm surprised it didn't have a resurgence, in this environment.
Yeah.
Because that's what's been holding, like you said, it's been a huge thing in the economy is shelter remaining high and the lack of inventory, and it's directly due to that. There's no transferable mortgage rates.
Yeah, no, absolutely. But like I said, I feel like that might be starting to break. You're starting to see more home sales for sale, more homes for sale than buyers out there.
Now we're getting, the reverse of it where, all right, some people who probably have paid off their homes at this point want to sell their home, but the buyers are looking at the 7% rate.
Yeah.
They're just like, can't do it.
Yeah.
I'll wait.
So what percentage of GDP comes from home sales? Is it 4.5% of total GDP?
Yeah, I think it's 4% is the number.
4%. And then I think if you add like refis in there and HELOCs, I think it comes up to somewhere around 5, maybe a little bit less than 5. If we actually start to see, kind of a turnaround in home sales, that's going to be pretty positive for GDP. I'd like to see that. And I know there's a lot of buyers out there.
I don't know where the floodgates open on that. Is it, mortgage rates coming down 1.5%, 2%? Would you say maybe is where there's a lot of interest?
I mean, I think if it starts with a 5 instead of a 6 or 7, that's probably a lot better for people. Not just that
who've been waiting for 3 or 4 years and saving, or I guess hoping to save money. Not that renting is cheaper, but
I helped somebody look for an apartment a few months ago, a 1 or 2 bedroom, not a crap hole. And there's very little available for less than $2,000 a month around here. And depending on where you live, that's either really, really low, like if you're from, downtown Philadelphia or any big city, or if you might be out in the Midwest somewhere, maybe that's, higher than average. But $2,000 a month for here in Berks County, Pennsylvania, seems like a lot to me.
Yeah.
Definitely seems like a lot because you can buy a house, right? Well, you used to be able to buy a house. I don't know. But along with the house cost, one of the things that I'm noticing recently is the cost of electricity. And I'm not necessarily one of those guys that's analyzing every dollar that I spend at the house with the whether it's internet bill or television or something like that. But it's gotten to the point where the electric bill, other than the mortgage, is the biggest bill that I pay every month, housing related.
Yeah, I mean, and it's been on a steady march over the long-term higher, but it seems to really have jumped recently. I know I discussed with you earlier today, I'm coming up on my, I guess, re-up cycle where, my former contract ends and I choose another supplier, but it's going up.
But no, so you play that, I'm going to say, game of changing your
Supplier.
your energy supplier.
Yeah.
Has that saved you money?
Yes. I mean, you still have to pay the transmission charges, so it's not like a huge delta like you would think it would be, but yeah, I would say, we're talking 2 or 3 cents per contract, and every year I have to make sure go and shop it, find who needs, a deal. And
I get those things in the mail all the time. I'm just freaked out because what I don't want to happen is to go from, I don't know, 8 cents or 10 cents, and then all of a sudden somehow jack up where it's now at 35 cents, and either I'm locked in or I don't recognize it somehow. I guess I would recognize it, but
I'm at like 6.29 cents per kilowatt hour, and the same supplier is sending it to me, and it's like it's going up to 16.59. I'm just like, how can it jump that much in 1 year? So I'm gonna shop that and try and find something.
Yeah, no, I got you. We pulled up this chart and we looked at the cost of a kilowatt hour going back to, I think it was 1977 or 78, something like that. But I marked 1980, and it's about 5.5 cents per kilowatt hour in 1980. And if you remember back to the 80s, nuclear was pretty big back then.
Mm-hmm.
We hadn't had 3 Mile Island, not that it was an explosion, but a leak at 3 Mile Island, or a shutdown at 3 Mile Island. We hadn't had what's the
Chernobyl?
Well, we hadn't. No, I don't know.
That's in the 80s,
yeah,
86.
mid 80s, 86, 87, and in Ukraine and Chernobyl, and then obviously in 2011 we had Fukushima, right?
Yeah, that was bad.
The tidal wave came in, knocked it out, and it released a lot of radiation.
There's a lot of toxic fish out there.
There are
in the Pacific now.
I'm sure. That's why I don't eat sushi anymore. No, I do. I love it, actually. But back in 1980, the cost was 5.5 cents kilowatt hour. And today, the average price in the United States is a little over 18 cents per kilowatt hour. And it struck me as one of these odd things because almost everything that we look at, I mean, you look at the cost of a cell phone usage, not the cell phone itself, but the cell phone usage from 20 years ago. And in some cases, it was like $1 a minute. I remember having a phone in the 90s and I got an hour, and that probably cost like $135 all in. And now it's unlimited. I don't know that it's cheaper. I mean, the absolute cost is probably more, but the cost per minute is.
Think about TVs, how you can get, a 75-inch TV now, and it's 1/10 the price that was just a decade ago.
So why is it that with all this efficiency that's driving other technologies to be thinner, faster, better, smarter?
You mentioned it. TMI, Fukushima, Chernobyl. Everybody turned their back. NIMBY, not in my backyard.
So what do we have to do to get cheaper electricity? Build more nuclear?
Yep.
I mean, what we've seen in the
We've got to innovate. That's that in the stock market, everywhere, the big gains have always been from innovation. Sure, things can always be safer. I mean, we're bringing back TMI now. Microsoft, their deal with Constellation, they're going to park and buy 20 years of energy over a 20-year time period from TMI. We have the Berwick deal. Amazon's parking a data center next to a Berwick nuclear facility. Yeah,
Berwick's not too far from us, a few hours north of where the headquarters are here, the northern headquarters. And they're going to literally build a data center, less than a mile away, right?
Mm-hmm.
You said 500 yards. I don't know that that's
I don't
actually
think
going
it's
to be
that
the
close,
case.
but
But less than a mile away of this nuclear power plant, um, does that mean all of the Amazon stuff that goes through there is going to be radiated?
it's a data center.
It's a data
It's
center.
not good. And
Well,
then Meta also
so
had
the
a
internet's going to
Constellation
be
deal.
radiated.
Yeah.
more
Supercharged.
more than it already is.
Supercharged.
Yeah, but I mean that seems like the trend, right? Years ago, Amazon was working and still is obviously with Postal Service and UPS and in some cases DHL and FedEx. And then they started to bring out Amazon Air, or it used to be Prime. I think it's Amazon Air now. And they started buying their own planes and leasing their own planes instead of using those third-party carriers. And so this is kind of a similar effect. They're going to be putting their data center right next to it, buying direct, not just like a schmoes, right, going through the company, but buying direct from the nuclear reactor. And we've seen this resurgence in these small nuclear reactors being talked about, being batted around. I don't know that there's too many that are commissioned already.
Yeah, I think they're still a couple years out. But yeah, you look at some of those stocks like Oklo or SMR, which is New Scale, a couple of those prototype SMRs. Their stocks are up. I think Oklo and SMR, I think they're both up 200% year to date or in that range. They were up like 30% just, a day or two ago. So this is the future. We have to innovate to meet our energy needs. In addition to, as we mentioned, nuclear has to be in the mix, and maybe that's why prices are bleeding upwards. We've got an aging infrastructure, so there's only so many dollars that these firms get from us. They also need to decrease their costs, and there's a lot of investment that's going to have to go into the transmission lines. That's sort of leading our prices upward, I guess.
Yeah, transmission's interesting to talk about because I always think to myself, why can't you put this massive nuclear complex in the middle of the desert where there's nobody around? We can speculate on exactly where that is. Or why can't you put this massive solar installation in the middle of the desert, whether it's New Mexico, Nevada, Utah,
Northern Arizona,
right? And then just push it all out. But there's obviously something lost, certainly on the local lines, but even on the high power transmission lines, there's something that gets lost on that.
Yeah.
But if you're putting your data center right next to the nuclear power plant, I don't think you're going to lose anything, right?
Never going to lose power, you would think.
Yeah. And obviously here in Pennsylvania, you live in what we call coal country, if you will, right? And so there's lots, I don't know how many right now, but there have been in the past lots of coal burning power plants.
Cogeneration,
yeah. Cogeneration, and certainly a lot throughout the United States and the world. And what we've seen is, the whole idea of putting too much carbon into the atmosphere, that's been met with a lot of pushback. And so they've been decommissioning a lot of these plants. I know there's a plant in Baltimore that's oil fired, right? That each one of the burners is running like 100 gallons a minute of oil, and there's 8 to 10 burners, not coal related, but especially in Europe, there's been a lot of pushback on coal-fired power plants. And they've also shut down a fair amount of their nuclear power plants.
Yeah.
And their cost has gone up significantly higher than our cost. I don't know how that's going to play out in the end because we continually utilize more electricity. I don't know what the exact number is, but I know in our household, everything's electric these days.
Yeah.
And I don't mean like versus gas. I just mean everything takes power.
Yeah, and the popular topic of lately in like financial circles is kind of, well, how much of this tariff inflation is going to be negated by the massive AI investment that has been done, where AI will, clearly boost productivity and then therefore act as a deflationary force. And it very well may be. I do expect it to be a deflationary force that will make productivity go up. But right now, for the energy needs, energy is going to go up. So the cost to run those models and train those AI models is still going to be pretty high right now. from the energy perspective.
Well, the more and more data centers that we have, the more and more technology that we use, the more energy is required to run all that stuff, whether it's in your house or whether it's in a corporation.
Mm-hmm.
I mean, I don't want to go back to 1960. It doesn't, it's not a great comparison, but there's a lot less energy being used, even though some of the things weren't as efficient, whether that's heating, cooling, things like that. But there weren't, people with 2, 3, 4 monitors and a laptop and a phone charger and, all the other accoutrements,
7 monitors,
all the other accoutrements that we have in our office, right? I mean, it just didn't happen. And now everything takes electricity. And it seems to me that there's probably going to be maybe a longer period of time, a little bit of runway for this to work itself out. So no matter what happens, we're going to be using more and more electricity. And I think as artificial intelligence continues to grow, those large language models continue to get bigger. I mean, you were saying earlier that you think it's possible that artificial intelligence is the same as me.
Yeah, I mean, we're getting awfully close to, I don't know if we'll call it like a horizon level event, but like where AI can calculate on par with a human brain. If we're not there, we're certainly near it. And, not to go backwards here, but let's think about how linked these things are between energy and AI. Sam Altman, who is the head of OpenAI, started ChatGPT, obviously. He was also the CEO and chairman of the board of Oklo, the nuclear company we were just mentioning as well. So these are inextricably linked, and it's super important for them to meet their energy needs because of how fast they're training, how powerful the algorithms are, as we mentioned, on par now, or near being on par with humans.
Yeah. If I'm not mistaken, he came out last night. He had a note that essentially said that flat out. Now, I think he was trying to sell a book as well. There was always a little bit about that.
Do another cash raise, maybe,
yeah,
too?
Another cash raise. So I guess the question is how much efficiency, let's say, and I don't mean in 20 years or 30 years, because you can't really tell that far, but, in the next, let's say 2 to 3 years, how much more efficient is the average worker going to be due to artificial intelligence?
Well, I just think of, I saw a report from Amazon, an internal study that they did where they were talking about, their different warehouse employees, and they estimated each employee would lose 4 hours a week going and checking, is this item in the shelf because it's not updated in our inventory or recently moved in to confirm. So again, they were saying across all employees an average of 4 hours. Well, think about that. That's 4 hours they're going to get back. So that's either 4 more hours to do other more productive things or 4 less hours that they have to work. So there's the deflationary force if they opt to decrease hours, or a multiplicative effect if they are working or being more productive those 4 hours rather than just walking across a warehouse floor saying, oh yeah, aisle D4, it's here, and going back to their desk.
I feel like it's going to come through. I mean, you're talking about Amazon and a big warehouse, but I feel like just as the personal computer got to everybody's desk and made people more efficient, I feel like artificial intelligence is going to filter its way down and cascade throughout businesses, big and small, to make everybody more efficient.
And it's not just going to be the growth hyperscalers that have been sort of seeing the investment hype over it right now. It's going to go down to all those value companies that maybe haven't been super productive because they're just cash cows. They're happy raking in their cash, but maybe it will change their operations so effectively that they will suddenly see a large boost in margins.
Yeah, it could be. I mean, I don't know from a manufacturing standpoint how AI will change a manufacturing plant. Let's say a plant that manufactures, windows or, Ford, Chevy cars. It probably will impact the designers and the office workers more than maybe right on the shop floor.
That's fair.
You think so?
Yeah, maybe.
And maybe artificial intelligence is going to come down onto the shop floor.
Or maybe instead of 100 people being on the shop floor, it'll be 80 or 60.
Yeah.
Deflationary.
Yeah. Deflationary. if we get a giant bout of deflation, and certainly not suggesting that that's happening because it's not really on the wall, and the Federal Reserve could obviously uh, provide fiscal accommodation for something like that, but you can't stop prices from going down if people aren't buying them. To your point earlier, it was that really only happens during crises.
Mm-hmm.
So I'm not worried about deflation. It would be nice, though, to moderate inflation and keep it in the, let's say, 1.5% to 2.5% range for another massive decade of stock market returns, right? That would help businesses in general understand their total cost, what they're going to have to put into the business, and be able to grow their margins knowing this side of the coin.
Inflation at a moderate level is not bad. It's when it's too high or deflation is too low where you start running into issues. So yeah, I don't think if we would have a healthy range of 2 to 3% inflation for the next decade, I don't think that would be a bad thing, especially after all the extraordinary things we did after the GFC and post-COVID.
Yeah. It feels like that stuff is just getting worked out. Obviously, COVID was 5 years ago, a global financial crisis. The low in the market was 2009. But I think from a mortgage and real estate scenario, it really took years and years and years to come back from some of that. If you were a condo owner in South Florida, obviously now that's returned. It may even be falling back a little bit. But it took a long time to get through that. And, sometimes the stock market reacts, well, all the time, the stock market reacts to the news instantaneously.
Mm-hmm.
But the economy doesn't. That takes a long time to filter through. And, we could get into a deflationary situation. I saw gas this morning, local near me, was like 303. Not that that's deflationary, but it has come down after
Gas has
staying.
gone down 12% over the last year. That is deflationary. Now, that's a commodity where you expect fluctuation, so it's not necessarily the same as a CPI number going negative. But
yeah. Speaking of gas, we are taking a little trip to Spain coming up at the end of summer, and we're renting a car, and we're going to be out there, just Ailish and I, driving around northern Spain, and I'm going to have to deal with all of that stuff, and I don't know really any Spanish. Can you use Google Translate as you're driving, like on the road signs?
I don't see why not. How does that work with your insurance? Do you have to give insurance a heads up? Be like, I'm going to be driving on the other side of the road.
Yeah, I don't know. I have insurance. That's a start. But speaking of Europe, I mean, so here we are. Stock market is up 2.5% for the year if you're measuring the S&P 500.
Best May since 1990. I know we're almost halfway through.
What
June
was the
now.
number?
6.2%.
Yeah.
And that May 1990 number was a banger number, 9.8.
Wow.
So that was, was the best month since then.
Crazy stuff. Have there been any other areas that have outperformed the United States?
Yes.
Yes.
Europe.
So I keep pounding the table on here. If you're a regular listener, you hear me say that a diversified portfolio is starting to work again, or is working in 2025. And a lot of that has to do with Europe and international stocks in general, whether it's developed international or emerging markets. They are outperforming dramatically. So year to date, emerging markets are up something like 14.2%. Developed markets are up significantly higher. The IFA is up, I think, 23% year to date. And they had a little bit of a better rebound off the April 6th lows. I mean, not dramatically better. We're up 21% off the lows. They're up 24.5% off the lows. But it feels like something has changed. And I'm not going to speak about developing, but in terms of Europe and the EU, the European Union, it feels like something is changing pretty dramatically. And I feel like I got some of it wrong. I honestly thought the tariffs were going to impact the US reasonably, but they would have a stronger negative effect on Europe and other parts of the world. Well, we haven't seen the end of the tariff back and forth, but it does seem like what's happened in Europe is that they've realized that it's not the tariff situation so much, but it's the NATO situation.
Mm-hmm.
And this administration wants to make sure that Europe is paying their fair share in NATO in general. And so what they're doing is they're committing a lot of dollars to spend in Europe. And that's money that wasn't going to be spent in 2026 or 7 or 8 or 9. And it is going to be spent now, which is one of the reasons that you're starting to see Europe really outperform. And who knows whether it's going to continue to outperform, but it certainly has this year. There was a budget passed in late March. They're going to spend an additional $830 billion on NATO defense. To me, that seemed like a big chunk of change. Just for this guy right here. I mean, almost $1 trillion. And they're already telegraphing that there's going to be additional funds being spent. And you see some individual countries that were not spending what they need to spend. One of them happens to be Denmark, as far as developed Europe. And they're saying, hey, we're going to put in, an extra $4 billion and bring our spending well above the 2% of GDP that they're asking for.
That's good. I mean, I know Trump hounded them on it, saying they haven't been meeting their 2% commitment and they need to step up. Well, they are. Maybe out of a little bit of unhappiness with us, but
Sure.
they're stepping up and they're paying their fair share. And like you said with Denmark, even a little extra. They have that readiness 2030 plan or something like that they're investing. So they want to have, I guess, their militaries and their spending, yielding good investments by that time.
Yeah. I don't know that it's 100% of the cause for this outperformance by Europe, but it's a big factor.
Investing in your own region, definitely.
Yeah.
It's definitely increased that trend for them wanting to, buy domestic and look at it from a Euro perspective.
Yeah, well, this budget actually says that half of the spending has to be from European companies on defense. I mean, they can still buy planes from, Lockheed Martin or Boeing, although I don't.
11-year backlog.
Well, but today,
estimated.
I mean, today they lost one of their first 787s, which is a newer plane. I mean, it's been around for a number of years, but it's the first one ever to go down. The Air India flight flying to London from.
One survivor, which is amazing.
Is it like that movie with Bruce Willis? Unbreakable?
Yeah.
Right?
Yeah. Great movie.
So you're one survivor out of 241 other people. Do you have survivor's guilt?
Yeah, right. It's like, does he get a bigger payout when suing or a worse payout? Because if he was traveling with someone, that's trauma. Yeah, but that's trauma. And
so the first thing you think of is the payout from the insurance company?
I'm just thinking about is it more or less? Because obviously the families will be compensated. That doesn't make up for it. Super sad. I mean, there's some footage of it going down in densely populated area.
I saw the tail of the plane sitting on a roof.
Yeah. And I think that's the first 787 to go down. I mean, I think it's been out about a decade and there's been no issues. It's not like the 737 MAX that Boeing's had insane issues with now. Boeing stock has been on a tear this year. We talked about that earlier. I think it's up over 20%, you said?
Even after being down today.
Yeah. So it's been a comeback that, there's always been, like we said, they have an estimated 10, 11-year backlog. I don't think one or two issues is going to destroy that backlog. It's just a sentiment thing and a regulatory thing.
How many planes a year do they make?
600-ish, approximately.
They slowed that down a little bit for
quality control when the Honeywell guy came over.
They need a little QC, don't they?
Yeah.
Probably a little bit more than that. But I mean, you're talking about lifting these, 200-ton aluminum frames up and flying them all across the world. I don't care what you say. I'm not scared to get on a plane. Not that you're saying that. A crash like that is not going to make me not get on a plane.
Yeah.
I'm going to go about my daily business.
And this very much may not be a quality assurance issue. Unfortunately, just in the world we live in, sometimes things go wrong. An engine blew out at no fault of any of the pilot or the company that made it. Unfortunately, things sometimes happen. Cars break down all the time, right? And it's not necessarily someone at fault.
Yeah. Well, that is certainly something to give consideration to. It's not going to stop me from getting on a plane, but definitely Boeing is going to be looked at pretty.
Airfare down 2.7% in May.
In CPI?
Yep.
Yeah, that's awesome. That's great for people that fly, right? There's no question about it. Before we get out of here, I want to bring up Brian Wilson, right? So the lead singer of the Beach Boys, the creator of the Beach Boys, he passed away yesterday. And I used to listen when I was a kid. The Beach Boys were on everywhere. If you're in my generation, but you grew up listening to the Beach Boys too, right?
My dad rocks the 60s music. So yeah, I heard some. I also have fond memories of my childhood playing games with my friends. We had, I think there was like Beatles 1 came out and a Beach Boys like remastered album came out about the same time. So we had both of those. We play them pretty much on repeat.
Yeah. They sold something like 100 million records. I know my parents had Pet Sounds and they probably had the other records that they had, but I went through some of the songs. Good Vibrations, God Only Knows, California Girls, I Get Around. I'm not going to sing out there. I thought about it. Should I prep my voice? But I'm not going to do it. Wouldn't it be nice? Wouldn't it be nice? Never mind.
He's
but
doing
like,
it.
I can't believe. So I mean, I can believe that he passed away. But it's going to be one of these things where everybody, just like I did when I found out, I went out and started listening to it. So they're going to get paid a little bit because he died, right? Or at least the estates will.
Yeah, always a pickup in sales.
It's kind of nutty.
But deservedly so. It's some great music that maybe you needed. Unfortunately, at this cause, what was he, 95 years old?
No, 80, I think it was 82.
82.
95, yeah. So they sold 100 million albums. The Beatles sold somewhere between 500 and 600 million. We still got 2 left.
That's wild.
Yeah. If you have an opportunity, I have not seen them. They were in Philadelphia. Not they. He was in Philadelphia. Ringo Starr is around, and Paul McCartney obviously is still around. He still does a little bit of touring.
But is it the original Paul McCartney? I'm sorry.
What? Get out of here. If you have an opportunity
switched them.
to see any of these old guys play, it doesn't matter who it is. I'm on my Tom Petty tour, right? We wanted to see him. He died. You're like, well, you're never going to be able to do that again.
Beach Boys at the Sphere?
Yeah. Absolutely. The holographic Beach Boys, I'd do it.
Oh, that's cool.
You know who's at the Sphere, or just announced they're going to be at the Sphere?
Who?
Backstreet Boys.
Oh boy.
Yeah. I heard that and I was like, well, yeah, I don't think I could do it.
Not my jam.
Yeah. What else do you have for us today? Anything interesting?
I'm just surprised you didn't bring up. It's now already passed in the news cycle, as quick as the news cycle is. But the bromance that fizzled out for one day, it was a massive blow up. Accusations both directions. There was accusations. Musk got punched by.
Well, he was on the television, and there was visibly black around his eye.
That's wild. I think Steve Bannon was the one putting that out. So, maybe with a grain of salt, but if that's what happened, that's pretty wild.
Yeah.
But now,
you don't think there's ever been a fist fight at the White House?
Oh, for sure there has. But with the world's richest man, I don't know about that. Pretty wild. But, yeah, it seemed to fizzle out, though. It was that one day. It was like a flash in a pan, and then somewhat radio silence since then. Musk was like, I'm going to decommission the Dragon rocket project. And we're like, uh-oh, we don't have any other options.
Yeah. I don't have too much to say about that. I think it's a little bit embarrassing to have the president and, as you said, the world's richest
America
man
loves that.
Fighting.
We watch Jersey Shore here.
Well, that's what it seemed like a little bit. Yeah, that's what it seemed like. I think that's beneath those two men to be airing that in public. I prefer the guys fighting, punching each other, fisticuffs in the White House rather than to doing it on X.
Whatever happened to Musk and Zuckerberg? Thought they were going to have a cage match.
Oh,
that was like 4 years ago now.
I'd be interested in.
Yeah, Zuckerberg's tried to change his image over the last couple of years. It seemed like
from what to what?
Nerd to not nerd to normal guy.
That's the old Jeff Bezos meme, right? Him in the 90s, I sell books. Him in the 2023, I sell anything I want. And he's all buff and ripped
in his leather jacket.
Yeah.
Now Jensen's wearing the leather jacket at all his things. Money, people, changes you.
It certainly seems that way. All right. I'm going to wrap it up there. Questions, comments. We did get some feedback on Pete Rose last week, a little bit going back and forth. That struck some emotions with people. Won't go into the details, but definitely there's some, maybe that's just because we're around Philadelphia and he was here. But yet that struck some nerves with people out there. If you guys have anything that you want to comment or ask us, please send us your questions. Market Enthusiast at Good Life FA for Good Life. And everybody here, I'm Noah Brooks and Chris Needs. Thanks, everybody. Thanks for listening.
Opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.